What's up everybody, Tom here with another video. In this video, we'll be covering the latest stock market news, including the vaccine that just came out in terms of results. We're talking about our technical analysis of the S&P 500, Nasdaq, dollar index, gold, Bitcoin, and more to try to get an idea of what this means for the stock markets right now and of course moving forward. We've seen huge moves since the US election, and overall, are we starting to get into a bit of bull trap kind of territory? We'll be talking about that big sell-off we saw. Heaps to cover. Stay tuned. Alright guys, well, the best place to start is always going to be the heat map of the last 24 hours in the stock market. And boy oh boy, was it crazy. For anyone that joined us in our live stream, which we do every Monday on this channel before, of course, the opening bell, we were talking about the tech stocks and things like, of course, Zoom were not going well. Zoom was down upwards of almost $100 at one point there during the open, and it closed very, very deep in the red. We also had Microsoft, Apple, even Google, Facebook, and Amazon all kind of declining throughout the day. Other favorites, Nvidia, PayPal, all of the main favorites of the last couple of months were declining. And the main reason for this is, of course, that we are seeing this potential vaccine news, and it could be very, very good, therefore bringing maybe a premature end, hopefully, to this crisis. I mean, I'm sure everybody would prefer that we do have some opportunity to deal with this current situation. Now, if we have a look at financials and other sectors, which we will in just a moment, you'll see how big a news this was for those. But let's just talk about what happened on the actual broader markets. Nasdaq actually ended 2.16% down, S&P 500 2.27% up, and the Dow Jones 3.44%. But if we took the futures before even the market open over here, they were actually up even more. The Dow was upwards of about 5.5. The Russell 2000 7+. It actually hit a limit up. S&P 500 another 4. Everything was just absolutely going crazy in the futures. And again, it shows us, do not think of the futures as the same as the real market. Similar to what we've always seen here, big bull traps in the first hour of trade. Up till this 10:30, we saw mostly buying through, of course, the Nasdaq stocks, a little bit of selling across the board on the other two, and then the rest of the day, especially on the Nasdaq, was a decline followed by selling at the close of the day. Notice there's a spike tick in both the Dow and the S&P, but not in the Nasdaq. And at the close of the day, that's where Wall Street is really making its decisions. That's where the real volume's coming in, and everything that we need to know about the day happens there. If we look at the sectors, it's all about energy and financials. Yesterday, financials market doing 8.21%, big recovery in that value area, and energy 14.28%. We're talking about Exxon quite a lot recently, and it was really that catalyst that started pushing it up, but it's still got a long way to go before, of course, it even gets close to where it was pre-crisis period. Worst performing sectors, no surprise, technology, etc., were down the bottom. And now eyes will turn to how effective really is this vaccine? Is it as good as this says? How long will it take to come out? There'll be still a lot of questions. And I think that's why we've seen a bit of a sell-off in the markets. The FOMO was real. Everyone was really hyperactive yesterday because of the large moves. And I actually saw, just after we finished the stream, put-call ratios, the amount of calls being opened was insane. The amount of calls, guys, was so wild that no wonder there was a sell-off. Remember, when Wall Street sees something that they can profit off, they will always take that advantage to really eliminate the FOMO from the retail herd. So let's stuck into some of the information that we saw yesterday. Put-call ratios here, total put-call ratio 0.74 and S&P 500 1.52. So this is down actually quite a lot from the 2+ that we were seeing the days before. And as I said, calls were being opened during the start of the session at an extreme rate. Q3 earnings beat data, still very good, 81% beat data. Few notables, I guess, yesterday. Things like Beyond Meat did not do so well. McDonald's also announced that they were coming out with their own plant-based burger. This just shows one thing that Warren Buffett always teaches us with investment, that is, you want to have a high moat on your company, as in it's difficult to actually compete with your product. You have to have some competitive advantage. And this was always going to be something that McDonald's, Hungry Jack's in Australia, which is Burger King in America, were going to try to do. They're probably going to try to make their own product to save on costs long term. It's just such a scalable thing if they can get it done. Let's now, though, talk about the broader markets and the technical analysis moving around the world. So the VIX, notably around 25.8. The put-call ratio came down to about 0.749. So we're starting to get down to those 0.6 areas. Remember, when the put-call ratio is down here at this 0.6, 0.5 area, that really means that the bears have completely lost control of the market and the bulls are firmly in control. But the contrarian nature of put-call ratios means that we should therefore be looking more at the point of potentially we get a sell-off or a bull trap or something like that, or a blow-off. Any of those types of things are occurring. So that VIX again, 25 held. Let's just quickly scroll in here and go to a 2-hour chart. Just have a look at what happened yesterday. So the actual market got underneath 25. It opened underneath, but then by the end of the day, the VIX had rebounded, therefore closing a day above this 25 zone. That's very, very important for the VIX. This particular area has been a stronghold here. And remember, we go to the daily, look at this little bullish hammer here off the base. So this is showing that the volatility index does not want to get underneath our very important 25 zone. If it gets underneath here and closes, where do we expect it to go? All the way back to 20. And then of course, under 20, the VIX or fear index returns back to normal. Let's take a look at dollar index now. Engulfing candle, probably the notable of the day. Basically, people moving back into dollar after we saw that initial hype in the morning. That 92 zone, just around there, 92.20, remained a buy area like it was previously and over here. And there was some bullish intentions here on the dollar index, kind of contrarian to, again, what you would be thinking is going on in the market. Other things that note, oil. Oil spiked up huge yesterday. We've got here a top end resistance of 41.25 on US oil, but we were noticing coming into the session, and this is something that will happen time and time again whenever we're looking at big days or big earnings releases, is the session actually opened at the resistance. So it opened at the 41.25 and then of course straight sold off and started kind of declining. And this is what we were talking about during the session. We didn't expect oil to be able to hold that resistance initially, and it's pulling back down now to a 1 hour 20 exponential moving average, and it potentially might even go down to this 39 level where previous resistance finds some form of support, and then we see buying pressure. For oil, the really big bull case is above 41.25, and we'll be talking about this more as we start to see this story unfold about the vaccine and other things around the world. Let's now talk about the broader markets though, and I just want to bring up the first thing here. Pre-market futures got to 36.76. Now, if we go and have a look at our pivots and the pivot R2, you'll notice the pivot R2 is around this 36.67. So basically, while the real market didn't quite get to that, what did happen is we saw that the futures hit a very key zone around this R2, and then they came off. They started selling off. So yeah, the 36.74 was really reached around that monthly R2 pivot, and then we started to see mostly throughout the day selling pressure come back through. Now we're sitting right around that 35.45, 35.50 zone. Previous resistance potentially acting as support. But I just want to highlight this candle here, a very bearish looking futures candle. If we go and have a look at the real market again, SPX, you'll notice that the actual market just looked like it declined all day. And this is a relatively bearish looking candle. Some people would claim this as a shooting star or a pin bar in terms of rejections. It's just important though that it stops right around the zone of the previous resistance. So it is point now where the market's going to digest this information. It's going to figure out whether it believes that it's already packed in enough price, and of course, how much trapping can they do of us, the retail trader. So here we've got the daily. We obviously have seen the rejection here on the bigger time frames. We go down to something like the 4 hour, and you'll notice it's still pretty far away from the 20 exponential moving average here, and we might have to wait for it to come down a little bit further, possibly even to this 3500, 3520 if it's going to hit that area. So it either stops here and finds some buying pressure, or it's going to continue on down, and the next level will be probably somewhere around this 20 exponential moving average and the 3500 psychological level. Buying pressure comes in around psychological double zeros and moving averages and Fibonacci retracements. Go back here to the daily and we think about what's happened since the election. If we took a big fib of the whole move, so fib from the bottom to the top, where are we right now? Well, we haven't even reached the 38.2 fib retracement. Where is that 38.2 fib retracement? Well, it's right around that 3,500 zone. So we know that when markets have a very large run on them, they generally like to pull back between a 38.2 and a 50 fib. And that's in line with bigger time frame moving averages, such as the 20 exponential here. So I'd probably be like looking at that level, targeting that level, and then looking for lightning bolt style moves, things where we see a peak kind of formed, a higher trough off the previous trough, and then we see movement up, we see hammers, we see other engulfing candles, all of those types of things. Never fall too much into the FOMO in these markets. Wall Street have become incredibly manipulative at the way that they're treating us as retail traders. They know there's a lot of new traders out there, a lot of new people, and they're taking advantage of that psychology very heavily. And we've seen that time and time again in Monday trading sessions more than anything else. If we take a look now at the Nasdaq and we consider these levels and where it kind of bounced off, again here, this is the US 100 futures. And why is this important? Well, we haven't seen a body close above this kind of 12,150 zone, 12,200 area. We've just seen bearish pressure come through previous time and again. Now, with this vaccine stuff and the information, it doesn't bode well for companies that are absolutely changing the way that companies do business. Now, Zoom is on a trajectory for massive growth. If we start to open up the economies and everyone feels safe and those types of things, do we think Zoom is going to decline in terms of earnings? It most likely will. Things have changed forever, but that's part of the reason why the technology is not doing so well. For people that are still looking at Nasdaq though, things like this 11,600 come to mind straight away. Previous resistances are going to act as support, and at the same time, you're going to have, what is this? A 20 exponential moving average. So for pullbacks, there could be a little bit more actually in this pullback here. And if we take a fib retracement of just the move, again, it's very much in line with our 38.2 to 50 fib level. So if it comes down even a little bit more, it's on our 38.2 right now, but if it comes down even a little bit more, it'll hit the 20, it'll hit previous resistance, which will act as support, and everything will look good. You usually don't ever want to be in a trade with just one reason. It needs to be 3 to 4 really solid, different reasons to be in something. For the traders out there that are in Australian market, we've seen some very large moves here. Bit of a decline now, 63.97. So we're really only up about 100 points from yesterday. But boy, oh boy, was it crazy last night. 65.50 on the high here. What's clear though, that any technical analyst would be able to see this zone. And this is a very clear level of resistance. Around that 6,200 to 62 kind of 30 area, we have resistance, 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 and then a break and close through. This is absolutely a confirmed break close through. So now if we see a retracement in line with the other markets, the S&P 500, Nasdaq, etc., if we get back down to this zone, what are we going to be intersecting? 20 exponential moving average. At the same time, we're going to have all of these 1, 2, 3, 4 resistances acting as support. And there's going to be some buying pressure you would expect here from a technical analysis chart. So good luck to Australians out there, but very, very interesting. Big day for financials. And of course, we have a lot of financials and oil and energy in our index. All right, let's now take a look at BTC. So Bitcoin has been very, very popular. We know that Bitcoin's been moving with retail kind of investment. We know also the whales have been in control of this. Our tell on that is that just before the 16,000 psychological, Bitcoin stopped twice, found 2 points of resistance, and then is sold off both times. Different to gold, it's still holding very well. But I always looked a little bit to gold as if gold's reacting a certain way, often Bitcoin will react a little bit after that. So at this point, we are seeing a sell-off on Bitcoin, but not as fierce as I would expect. And the 50 exponential moving average here on the 4-hour remains one of the key support targets. It was support here, it was support here, it was support here, here, and potentially even again. So look to the 50 exponential moving average a little bit on Bitcoin, and of course keep your analysis on gold, because if gold falls through this 1850 area, that does not bode well. I feel a bit bad for some of the people that were bullish gold here and didn't have stop losses in, because this is a pretty brutal sell-off. Basically $100+ of sell-off here from gold yesterday. And it's found the 1850 as a level of support, and it is buying off it right now. So hopefully it starts to hold. But just remember, if we look at the larger timeframes here, we go things like a daily and we think, well, what happens next for gold? Well, after 1850, there's not much structure on the left-hand side protecting it. We're really saying, okay, we could move all the way down to 1800. There's a 50 chunk here that could happen very, very quickly. Go to a weekly, it becomes even more clear to me that's what we could be seeing. We're on currently the key level for the weekly support, the 20 exponential moving average. It closes underneath that. Where to next? History would say the 50 exponential moving average. And if we take a look at that on the chart, that's pretty low. That's a 1760 kind of zone right now. So I think that with gold bulls, this is the time when the bulls need to get back in control of gold. It has to be the real buy zone here, and we need to see gold move up. If gold fails here, back down to potentially the 50 exponential, similar to last time, is certainly on the cards. Remember, history shows us statistical chances, and that's what we're looking at here with these moving average pullbacks and what basically could happen in the future. All right, guys, well, look, it's been a crazy last 24 hours. It's really been a whole crazy couple of weeks in the stock markets. This is the time where if you're setting long-term positions, you make long-term investment choices. Don't make knee-jerk reactions as much as possible. If you enjoyed this video, please remember to, of course, subscribe, hit that like button, and thanks so much, everybody, for the support recently. We hit 25K live. We didn't even realize it last night when we were streaming. And I'll tell you what, I do appreciate each and every one of you for the support that you've given us throughout this crisis and obviously throughout this content creation. Good luck, make as much money as humanly possible, and I wish you all the best. Bye for now.